The Reserve Bank decided to cut the cash rate from 3.25% to 3% yesterday. They felt that there's plenty of stimulus in the economy at the moment, but that an extra 25 basis points would help at this point. So the big four banks, much to the displeasure of the government, have decided not to pass on the 25 basis points to homeowners. So the National Australia Bank has said that they're not going to pass it on at all, and the Commonwealth Bank has said that they're only going to pass on 10 basis points. Well, the banks say that their cost of funding has remained very high, and that for them to remain profitable and earn a reasonable return for their shareholders, the risk that their shareholders are taking, then they need to hold on to this 25 basis points. And the federal government is very angry about this. The Treasurer said this morning on radio that it's damaged monetary policy, that monetary policy is not as effective in Australia. And by monetary policy, I mean that when interest rates get cut, that credit expands in the economy. Demand and supply for loans increases, and that's what the government wants, to ramp up the economy. The Treasurer said that monetary policy is less effective if the banks don't pass on interest rates, and that's correct. But you know, there's actually something that the government can do about this. The government could simply choose to force the banks to benchmark their mortgages to the cash rate. Because at the moment, when you sign a mortgage in Australia, it's really, you can shop around to get a good rate, but once you get that rate, then you're locked in for the term of the loan. It's up to the banks what your interest rate is, which is really a very strange thing. And the federal government could insist that the mortgages that get signed with households are actually benchmarked to the cash rate, so that when the Reserve Bank cuts the cash rate, then the mortgage rates just come down automatically. The federal government could simply do that. You know, I think they'll hold out against the government. They're not going to sort of reverse the decision under government pressure. Some of the disappointment from the government comes about because they've really given the banks everything that they want. The government guaranteed deposits, the government guaranteed the loans, the money that the banks are raising overseas, the issuing of bonds overseas. The government has agreed to set up RUD Bank, the Australian Business Industry Partnership, which is the federal government taking the place of foreign banks in loans for commercial property. So really everything that the banks have wanted, the government's given them, and the federal government really wants this thing, the passing on of all of the interest rate cuts to mortgagees, and they're not getting it. So I think tension between the banks and the government is going to rise here, but I don't see the banks backing down on this. I think that we're really having a breather in the global economic crisis at the moment, and that there's quite a lot more bad news to come. I'm sorry to say that, but there is quite a lot more bad news to come. And I think that when that bad news does come through later on in 2009, then we'll see further rate cuts. We could easily go down to 2%.